Welcome to this week's Q&A. We've got a terrific question from one of our viewers in Singapore this week, and they've asked, what am I going to do? I've got a fixed interest rate loan that's about to expire in the next few months. What can I do? Because I keep looking at what's happening to Australian interest rates, to the official cash rate there, and it's going up very aggressively. Well, the short answer is that at present, probably the best course of action is no action when that occurs, i.e. your rate will then go to a variable interest rate, and potentially the best thing to do is simply leave it as variable for now, depending on what happens over the ensuing number of months. And the reason I say that is because the Reserve Bank of Australia, the last two meetings, has handed down 50 basis point increases both times and has indicated that it potentially will do so again at the August meeting. So whether that's the right path forward or not remains to be seen, but it is certainly aggressive. And as I've said before, Australia is not in the same predicament as the US, where you have got, this wage price spiral growing. We don't have that. Our wages growth is very tepid, and Australia is impacted by many supply side causes of ongoing inflation. So monetary policy may not necessarily alleviate those. So whatever happens at the next meeting, if the RBA does increase another 50 basis points and that gets passed through by all the major lenders to the variable cash rate, the best course of action at this point in time over the next 12 months or so is potentially to remain on a variable rate and hope that that the Reserve Bank actually pauses after these rates and looks at the impact that it's having on the economy, because the Australian economy is very sensitive to interest rates. Historically, we've had a sort of 85% of people on variable interest rates, and that changed to about 55 to 60% during the last couple of years of the pandemic, when most of our clients certainly were advised to look at opting for a very low-priced fixed rate loan, which may have lasted for 2-3 years particular, but some people chose 4 or 5 years and paid a little more, and they're obviously now somewhat sheltered from what's happening as overnight official cash rates increase very rapidly. So it's really important to know what else is happening though, because this particular viewer also has other variable rate loans and has those fully offset with cash. And what we find is, especially dealing with Australian expats around the world, is that quite often, because they are so time poor and are looking to do things, they often have quite a lot of their assets simply tied up in cash, being in generally various currencies depending on where they work, and quite often potentially most of that will be in the currency that they derive their income in. So it's really important to have a look at all of this and see when this fixed rate loan actually expires or turns into a variable rate loan. Let's see if there's an offset account attached to that. If not, we can arrange that, and then look at potentially utilizing some excess cash to offset interest on that loan. The reason I say that is because if interest rates do continue to rise rapidly, and let's say the variable interest rate is 5.5%, then it's not a bad rate of return, I guess, if you have cash sitting around earning far less on a deposit with that lender. If you can change that to making use of it on an offset account, you can generate a better return for yourselves and have obviously a far lesser degree of volatility than if you're investing in other mark-to-market assets or any other assets apart from cash. So it depends very much, horses for courses, but there are lots of things that you need to look at, and it's not just a generic panacea to say do one thing or do another. If you found this of interest and would like to find out some more information, especially if it may pertain to your personal circumstances, then please contact us. You can email us or call us, and if you find this useful, then subscribe to our YouTube channel and click like, and I'll see you again at next week's Q&A. I'm Andrew Unterweger from Wise Guru.